Well, good morning, everyone. Welcome to our Friday morning trading room. Get the screen share going on here. Now, it is Friday, and I do believe today is one of our rabbit hole Fridays. I think last Friday we were trading. So this Friday, we're going to mix it up a little bit. We're going to look at some indicators, some tools that might be able to help you become a better trader. And let's see here. Sure. Let's start first with this indicator on a time-based chart, and then I'm going to show you the indicator on the DTS and Raptor. All right, today's indicator, I thought we would start near the top of the list here, and we would go with the Arun indicator. Now, a lot of people haven't heard of Arun. Arun has the reputation of never being wrong. Isn't that cool? Come on, what's going on here? Oh, let's add it. There we go. And we'll get rid of the volume. There we go. Okay, so this is your Arun indicator, a couple of squiggly lines. Wait a moment here. Before we get too far along with this, let me change the colors. I know programmers get bored, but we're also trained to see red and green for up and down. They really should just leave it that way. Okay, so your Arun indicator. And as with most indicators, they're meant for time-based charts. We're going to start here on the time chart, then we're going to take it over to the mean Renkos and the DTS and Raptor system. As I mentioned, the Arun indicator has the reputation of never being wrong, of showing you this formation that is right all the time. And what is that formation? Well, it's this cross right here. It's when the indicator crosses that you produce your buy and sell signals. And the idea is that when this happens, you get valid signals. The Arun indicator is similar to your DMI indicator. The DMI, you'll remember, is the one that has the two squiggly lines on it as well. With the Arun indicator, you also have a bull line, the green line, and a bear line, the red line. The line that is on top is always dominant. So we've got here the green line, the market is bullish. Here the red line is on top, the market is bearish. And if you look at those crossover points, you can say, hey, that's pretty cool. The market crosses and all of a sudden it becomes very bullish, it crosses and it becomes more bearish, it crosses and it becomes more bullish. I've noticed a lot of indicators by default are set up with a 14 period. If you ever wonder why they choose 14, that goes way back to Wells Wilder, who did a lot of programming. He didn't program this particular indicator, but he developed things like ADX and RSI and ATR and parabolics and a whole bunch of stuff. The guy's just a crazy mathematician. Not crazy, but he produced a lot of stuff. Anyways, he was very big on lunar cycles, and there are 28 days in a lunar cycle. And so a lot of his indicators would be programmed for half of a lunar cycle. Essentially, the idea is 2 weeks out of the monthly cycle. I believe that if you're going to follow 2 weeks out of the monthly cycle, you're probably going to be better off looking at 10 periods, because there are 20 trading days in a month. So 10 trading days would be 2 weeks. I think that would be a more accurate representation than the 14. But the Arun indicator actually, by default, should have a 25 period. That is what the suggested value is from the programmer, from the guy who developed it. So let's throw the 25 period on there. Before I get too far into the signals, I should tell you what it is the Arun indicator is showing us. When you set your values at 25, you can see that the signals lag a little bit more, but it is a trending indicator. It's an indicator that tries to show you when a trend is developing. And it does so by showing you when the market is essentially making new highs and lows for a 25 period. In that case, it's really not that much different than the Donchian channels that we looked at a few months back. If we set those at 25, you'll see that when it crosses, see here it crosses lower. You'll notice that it's about the same time that the Donchian channels cross, the upper and lower bands, right? Makes a new 25 period low, the Arun spikes to the top, or it makes a new 25 period high, the Arun crosses over and the green line goes to the top. But the Arun indicator has some very distinct advantages that the Donchian channel does not. Because the Donchian channel is two-sided, you're always left guessing, is that breakout valid? Whereas with the Arun indicator, you're actually going to have a little bit more input. And so we'll take a look at some of that input. You can see that we have an overbought, oversold region here on the indicator. And those are usually set at 30 or 70. This is what mine are set at by default. Some traders like them a little more extreme, and they'll move them to 20 and 80. And yet others will just set it at 50%. Oh, I guess it's worth noting that as with most oscillators, the Arun indicator is set on a scale from 0 to 100. So it's never going to go above 100. It's never going to go below 0. And that's actually going to become very useful for us. What these zones show us, whether you choose 50, 70 and 30, or 80 and 20, it shows us when the indicator is actually becoming more bullish or bearish. So what a lot of traders will do is they'll not just look at the crossover, because sometimes the crossovers can occur at extreme points. But what they'll look at is they'll look at when does the indicator get into that above 70 zone. And in this case, it looks like we crossed over somewhere right about here. When the Arun indicator crosses above that 70 period, in this case, the green line crosses over, that is an indication that a bullish trend is developing. If you're looking for additional confirmation, watch for when the red line gets below the 30 zone. Then you've kind of got the double whammy. You've got the bulls and the bears both at extremes. So this is telling us that the market is continuing to make 25 period highs. The sellers are not able to rally it at all. And so now the market has become much more bullish. As you can see, that worked out pretty good. Yes, we missed this part through here, but remember, this is a trending indicator. It's a bit of a lagging indicator because it's time-based. We're looking at the last 25 periods. But if you're just looking to stay on the right side of the market, and frankly, who isn't looking to stay on the right side of the market? This is a very good way to discover who is dominant. And you can see that that's a monster trade. You get in near the beginning of the year and you just ride that trade almost to the very end. We did not get out of the 70 zone. I'm always tempted to call it the overbought zone, but that's not what it measures. But we didn't get out of this zone until right about here. So just an incredible move from down here to up here. And of course, you could have used other tools to protect even more profit, but even if you didn't, that's a crazy strong move right there. 700 points. Okay. Now, another feature that traders often like to look for with the Arun indicator, just for a little additional confirmation, is they like it when the indicator, again, doing opposites, they like to see when it hits 100 and 0. So when it maxes out to the bullish side and it maxes out on the bearish side. That's a little extra confirmation that the market is trading at an extreme point. Then you actually have one more confirmation. And it's this little zigzag pattern that is so familiar in a lot of indicators. We saw it on DMI, we saw it on RSI, we saw it on MACD, we saw it on Williams R. There's so many different indicators that do this same test-retest pattern, and we see it in price all the time as well. It's very important, and also important here in the Arun indicator. So essentially what you're looking for is you're looking for the market to cross above 70, cross below 30. And it makes this little zigzag pattern. So some traders will wait until it actually hits the extreme point of 100 and then look for a little zigzag pattern to develop. But that second push, that second attempt to move the market higher. And again, you hear me talking about it all the time in the trading room when we're looking for trading opportunities. That is your cue that, okay, now the trend is starting to develop. Now is our time to get in. And once again, you can see the breakout and the market really advancing nicely after that. All right, let's throw this indicator now on our charts. And I'm going to start here with the Eagle chart because, well, this is our Eagle trend trader after all. And I will use the 25 period. I'll leave it up to you to experiment with the periods. Okay, so we'll make the lines green and red. And let me flip-flop a few things around here. Well, actually, why don't I just get rid of the Bollingers for now? All right, so we have a 25 period. Oh, we've lost some of our zigzag with the mean Renkos. Oh, it's actually displaying a little bit differently here. Okay, some of the things still working out, some of the things a little bit different. Let me just, while I think of it, let me just show you something else. Very often the Arun lines will be tracking parallel to each other, and they'll always be descending like this. Typically, they're tighter than they are shown here. But when they're tracking parallel like that, that's an indication that the market is stuck sideways. So just another tool to define when the market might be in a chop zone. All right, so let's see here. So we're looking for the indicator to go above 70 and below 30. And we're looking for that little zigzag component. All right, well, this one actually working out pretty good, validating this signal right here. So prior to this, we had a lot of back and forth, and then this signal develops. You can see how you may have been a little hesitant to take this signal, given what preceded it, but the Arun indicator actually spotted it very well. The signal crossed, making the market immediately more bearish. We hit 100, which makes us a little bit more bearish. The green line went below the 30, which is confirming that the market is now heading to extremes. And then we had the little zigzag. After that, we produce our eagle signal and a very nice move going into the close. Now, you can see I would probably consider using something than the traditional exit for taking profit here on the Arun indicator. Again, I believe there's nothing wrong with taking profit on target. You would have very easily hit your 10 points. It looks like you got in somewhere around 97.37 out at 97.27. And as is very often the case, after we hit our high probability target, the market starts to make a little bit of a reaction. And that's, of course, what we got going on here. If you had waited until the Arun got out of the 70 zone, well, you pretty much would have settled for a break-even trade, and that's no fun. But that one really working out pretty darn good. All right, let's see what else we got. Okay, well, the indicator crosses were above 70, we're below 30. Let's see if it moves back. Oh, all right, maybe with the mean Renkos, we have to be a little bit more liberal with these with these little hesitations. Okay, let's see what happens here. So that zigzag occurring right about here, a little bit after the buy signal. Not much in that one though. You would have had to take it right on the buy. Okay, here they're kind of tracking parallel again, so suggesting the market's a little bit sideways. Still tracking parallel. All right, now this is something interesting. When you have both indicators crossing at extreme points, and this is often true of any indicator that has multiple lines on it, whether it's stochastics or DMI or whatever, Arun. When you have indicators crossing at extreme points, that is very often an indication that something big is going to happen. If you see your Arun indicator crossing below the 30 zone, and again, some traders will even prefer to see it lower. They'll prefer to see it crossing below the 20. We'll have to play with it a little bit because it looks like with the mean Renko bars, the Arun is really responding a little bit differently. But when it's crossing below the extreme point, that is suggestive of a big move coming. You will see this consolidation and crossing when the market is in a sideways trading range. Of course, the big question with the sideways trading range is always, which way is the market going to go? Is it going to be more bullish or is it going to be more bearish? Is it going to resume the trend that brought us into the trading range, or is it going to resume the overall trend or the last little hiccup trend? Well, the Arun, when it crosses like this in the extreme point, gives you an indication who is stronger. And right now, the sellers are stronger. We're getting the sellers are above. Let's see how that plays out. Oh, we just had another cross here at the extreme point. So now this tells us the buyers are stronger. And not only that, but we've gotten into the 100 zone. And the red line is still below 30. So we've got the elements of a developing trend. But what I want to point out to you is that when it's crossing in the extreme zone, it's usually an indication that it's going to be a bigger move. So you may be inclined to hold on a little bit longer. All right, let's see how this works out now that I've laid all my cards out on the table. Let's see, do we get a little, well, we're going to get a hiccup in price. So far, not in the indicator, but that may be okay. So we got the little, oh, we are going to get the little zigzag. What I like to do is when I'm waiting for an indicator like this to respond, give me that little zigzag move. As soon as I get the zig, I can set up for the zag. Meaning, if prices go higher, I'm going to get the push up on the indicator as well. So I can already be positioned to take advantage of the market. You may choose to wait for the whole little zigzag to develop to get the market going up to the extreme, coming down, essentially retesting the extreme before it goes back. I'll leave that up to you. You can see the zigzag came back. We're now long. Honestly, you would have not sacrificed too many points or ticks to take the second bar. And, oh, look at that pretty move. Getting another little zig. So it's falling off here because our highs are not higher than the last 25 period. That's why it's declining a little bit. But you can see we're in at around 79.52, easily out at 79.62. Take our profit, our $200 profit for our 40 ticks. And, oh, okay, let's see how this one works now. So we had another extreme cross, a little bit of a consolidation period, not as nice of a consolidation as down here, but a little bit of a consolidation. We got the zig, and right now the sellers are on top, so let's set up for the zag. I'll set up below the low. What time are we? Oh, we're almost into the market close, but we'll follow it through anyways. Okay, there's the zig. Where's the zag? Oh, no zag. We need a little bit more of a consolidation period and that extreme crossover. All right, so nothing came of that one, but that's all right. No harm, no foul. Let's see how we're doing with this. Actually, before we leave this entirely, let's see how it plays out on something a little bit faster, maybe on the Raptor. It's looking like it's a good day to be doing this because the market's all over the place. So with the down, let's make it red. And with the up, let's make it green. I'm going to delete the Bollingers for right now, just so we don't have too much stuff going on. All right, we are obviously in a period of consolidation. We're getting a lot of parallel bars or lines, pardon me. So that's suggesting the market is in consolidation as well. We're getting the crossover right now. The sellers are stronger, but the buyers haven't confirmed yet. The buyers have not slipped into this 30 zone. So that kind of serves to keep you on the sidelines. While we're waiting for the current prices to do something, let's go back here. Maybe yesterday's session. Yesterday was a good trending day. Let's see how it did there. Oh my goodness, come on. All right, so this is shortly after the market opened. Oh, let's go right to the market open. Here we are. Okay, the market opens. The pre-market, the bears are on top. The bulls confirm the bearish stance on the opening buzzer as the green line gets into the 30 zone. The red line's in the 70 zone. We've already had our little zigzag, and we produce a signal right here to short. This, you could make the case that this is a hard edge bounce. We're only a couple of ticks shy. And did that get low enough to find its profit target? 92 to, did it make 87? Oh, it did. Just barely. The market staying bearish, giving you a little bit of a pushback though. That would be annoying. But at the very least, you had an opportunity to, if not take profit, certainly to get your trade to break even. Here the bars are running parallel, so that would suggest to me that the market's sideways. Here we get a bullish cross, so the upper line is green, the lower line is red. But the red line did not get red until here, so it did not validate that number 2 signal. Here we go. The red line is above 70. The green line is below 30. We got that follow-up signal off the little zigzag. It looks like when you're using it on the mean Renkos, you may have to tolerate a little bit of imperfection. This trade working out very nicely. Even if you got it a bar or 2 late when the Arun green got below 30, you still hit your profit target. The signal actually printing a little bit earlier, the Raptor a little bit ahead of the Arun there. Okay, so we got some sideways stuff going on. Here, again, with the little zigzag. The little zigzag, and we're almost into the 30. We do have the warning dots, so maybe we could look at, well, we don't have the signal yet, but maybe we could look at taking the next signal to short. Which is right there. Okay, so it's printing at the same place anyways. Okay, so we're in there. Everything seems to be in order. Although the Arun is falling off a little bit, it is still above the 70. Okay, so we're short and, oh, getting a little bit of heat here. Well, at this point, if my initial stops were back here, I would probably bring my stops to here right now. Even though I normally suggest staying 2 stops back, the little bit of hesitation here is giving me pause. You can see the Arun, both the red line and the green line are coming out of their respective zones. Okay, getting another attempt. At this point, you could probably bring your trade to break even, and oh, come on down. Oh, there, they did make it. All right, a few little hesitations in there, but we managed to stay on the right side of the trade. Okay, that was all right. Let's play this forward, see how the next one works out. Now this is interesting. We have a little bit of a cross at the extreme. We're around this 30 zone. And if I were using a time-based chart, which I suppose you could run a parallel 15-minute chart or 5-minute chart alongside your Raptor chart, we've got an extreme cross, we've got the buyers on top, and we got our little zig. We do have a couple of signals here already, buy signals. None of them are a number 2 signal yet because we haven't had our test at the extreme. So decision time. Do you want to do a second push on those earlier buy signals, or do you want to wait for a number 2 signal? Well, given the way the trend is, the market has come down here, I think maybe I would wait for a number 2 signal. All right, let's see. So we're coming down. Oh, okay, the number 2 signal never developed. Regardless, I think you would have been okay. Even with your second push opportunity, the market never really got high enough to fill you. All right, here we go. We're heading a little bit lower. We got that little zigzag again. We're below the 50, not quite below the 30, however. Now that could be a little problematic. Again, it's something you're going to have to experiment with. I haven't spent a lot of time looking at it on the mean Renkos. So there's our sell signal. I'm going to take this on a little bit of faith. Okay, the market, now we're in sync on both sides. So we have a valid second push signal. So the green line below the 30, the red line above 70, we have our little zigzag and nothing. So we got the parallel tracking telling us that the market is in a little bit of a sideways funk. All right, we've got the cross, not quite at the extreme, but very interesting all the same that we have that little bit of a bullish crossover. Let's see if we get the zigzag. Oh, all right. Well, we got a quick little zigzag and a number 2 signal, and we are below the 30, above the 70. So let's take a look here at that number 2 signal now. So ideally, target the hard edge. And up we go. Actually, I think I ended up taking that signal yesterday. I kind of remember that quick little hiccup. Well, the Arun seems to have picked up that reversal. What I like about indicators like this is how they filter out all the other signals. You know, we got buy signals here, and it was a little questionable, but it gave us the opportunity to set up. But it validates the correct signal. Okay, so we're getting another little hiccup here. The red line's not below the 30 yet. Okay, so now, pardon me, we're below the 30. sorry, we're below the 30, we're above the 70, we have our little zigzag. So you could either look for the next signal to develop, the next signal to develop, or you could throw your just in case order to buy up there. Let's see how this one works out. Okay, so there's the next signal. We bought in and, oh, taking a little bit of heat on this one. I don't think we hit our profit target. We are in at, say, 65. We need out at 70. No, we're coming up short there. All right. If our initial stops were somewhere around here, this would be a good time to roll your stops. And with the indicator almost coming out of its upper and lower zones, you might even be a little bit more aggressive. Maybe even take it to break even. I'm always chicken when we get back to these reactionary zones. Let's see if we get a breakout. Oh, and oh, well, it touched 70. I don't know if it was enough to take you out, but certainly enough to get the trade to a break even. Let's see if it follows through. We're still above the 70. We're still below the 30. And no. But that's okay. It was a break even trade. Break evens are almost as good as a win. Here we get the parallel bars happening, or lines happening again, telling us that the indicator is that the market is sideways. Red line on top. Okay, we got the cross, and both are in extremes. Let's see if we get a little hiccup here or not. Are we going to get that little zigzag? Well, the Raptor producing a signal. It's not a number one signal just yet. I guess you'd have to decide when you're using the Minrenkos how important that little zigzag is to you, or whether you're just going to play the signal. There's a lot to be said for sometimes getting in early. The Arun is at the extremes, right? We've got the, we're above the 70, we're below the 30. Let's just see how this works out. Okay, we're getting our zigzag here. We got in at 50, we'll say 59, so we need out at 54. Okay, so here's the zig. Let's see, do I get the zag? Oh, all right. So this may have been an instance where it would have been worth waiting for the zigzag. Okay, here we are again above. No, actually, it wasn't worth waiting for the zigzag. Sorry. Unless you considered this little dip and bounce back the zigzag. It looks like once you got the crossover, once the indicator went into its extreme zones, that validated the signal. You can see you still have to run a proper stop. You could have brought your stop there to that swing and then eventually to break even and eventually to your profit target. And what is that now? We've looked at about 4 trades, all of them working out so far. A little bit more of a bullish reply at this point. So the buyers on top, we got the zig, we don't have the zag yet, and the red line is not near 30. So let's play it a little bit more. Okay, we got our zigzag. This isn't really, well, it is a number 2 signal. It won't print as a number 2 signal, because the test of the extreme was not low enough. But that is what it is. It's a number 2 signal. Now, depending how much you want to allow for the red line not being in the 30 zone yet, it looks like the red line is always delaying, or the bottom line is always delaying a couple of bars. But we do have the zigzag, and there is an early number 2 signal or an early number 1 signal, however you want to envision that. But let's say we take that. Okay, now the red line below the 30. And actually, look at that. That's working out pretty good as well. So a very interesting little indicator, this Arun indicator. Once you have a grasp on how to trade it. Let's take a look here what's going on with this morning. Now we had an extreme cross here, but it did not stick. Not really an extreme cross. We're still kind of waiting for something to develop. The market just really flat at the moment. Keeps flip-flopping back and forth. Okay, now we're bullish according to the Arun. Not quite in the 30, but certainly close enough. Looks like we're going to get our little zigzag. So the next buy signal, let's see what happens if we take a look at the next buy signal. Okay, I'm just anticipating that this warning dot will produce a buy signal somewhere around the highs. I was actually just going to move it a little bit further, but regardless, the red line now below the 30, the green line glued to the 100. Let's see if we get any kind of follow through off this. Feel free to experiment with the settings. Oh, actually, we'll take a look at the settings here in a moment. We'll try winding them up and shortening them. Okay, now we're getting the little zigzag. And the bigger test of the extreme. So we got the number 3 signal, but you can see with the Arun indicator anyways, the green line is on top, suggesting the buyers are stronger than the sellers at this point. Not looking all that good right now. Gotta see a pushback. And now the sellers be taking the dominant position. Which does not look good for my trade. Well, I guess that teaches me to wait for the signal to actually develop before I get on board. Where I entered, we just had the warning dots. So if the market heads lower, the green line will eventually get here below the 30. We've already got the zigzag in the red line. Give it a couple of extra ticks here, just below the low. I hate it when the market breaches a swing point, higher or lower, by a couple of ticks, and then of course reverses and goes the other way. So we're trying to hold this whole 80, 11, 80, 12 zone. What's this looking like on the eagle? See, the eagle was, well, we had that parallel structure there. The eagle actually getting bearish off of this green hard edge bounce right here. It looks like it's that kind of day, though. Trade forecaster in swing mode, moving into scalp mode. Yeah, Dan says it's interesting that the eagle has sellers in command and the falcon has the buyers. That's characteristic of these sideways kind of choppy markets as well, that your tools are going to be in conflict. Yesterday, where I'm not going to say trading was easy, but it was a little bit more predictable. The hawk, the falcon, the eagle, the raptor, all in sync. When they're out of sync like this, you get this sideways, constant back and forth nonsense. Well, knowing that the Arun indicator is based on new highs and lows, if I take out this low, I'm probably sunk. Yeah, not looking very promising right now. We're about to cross into the 30 zone. Well, lines are drifting parallel again, which suggests sideways choppy market. I think what they're going to do is they're going to test this bottom end and then rally up again. All right. Let's take a look at this again. So we're now above 70, below 30. We had our little zigzag. So I'm going to take a look at shorting. This time I'm going to wait for the signal. So we have our number 3 signal actually printed. Just not much follow through here today. Typical of a Friday, especially a Friday in summer. Probably get worse next month. So this little bar here, a little bit of a second push. Oh, looks like the current bar is also going to try to give us that second push. All right. Well, I'll stay with it for a few minutes, and if it doesn't actually start heading lower, we'll play with the settings a little bit, and then I think we'll call it a day. All right. When you play with the settings, it's very interesting to go to extreme points. So, well, here, let's start with the default. We'll start with the 14 period. And then when you put it on your chart, what you want to do is obviously you want to see how the signals performed. So here we have the red bar above the 70, the green bar below the 30. We got the little hesitation. And I guess that was confirmed here by the number 3 signal. Here we have a little hiccup. The red line above the 70, the green line gets below the 30 right here, but no signal developing. Okay, so that's fine. It looks very busy when the market is moving sideways like that. You get a lot of back and forth, but I don't think there were any bad signals here. Here's a We're above the 70, below the 30. We got the zigzag. We produced a number 3 signal. So we would have bought in here. And that is, we bought in at, say, 80.26. We need out at 31. Well, you would have had to be very patient with your stops, I'll tell you that. The market flip-flopping quite a bit. Never got a contra signal, but it did eventually get up there. Not exactly what you would expect from an indicator that's supposed to show you an emerging trend, however. This is interesting, though. With the faster settings, we do get those little hiccups. We do get those little zigzags developing. Let's see if we get any crossovers in the extreme zones. Well, I guess this was one here. Yeah, not much in the way of a follow through on the signal there. All right, so that was the shorter setting. Let's see what happens if we go with a higher setting. So let's dial it up, say, to 55. See what that does. Oh, well, it looks like we've introduced some zigzags. Let's see what's going on here with the current price. We got those parallel lines going on, suggesting that the market is sideways. Okay. We're above 70, we're below 30. We produced a buy signal right here. Yeah, still above 70, still below 30. Oops. So we produced a buy signal right here. We're in at, say, 27.5. We need out at 30.5. Well, that worked out okay. Avoided a lot of the noise. We're above 70, we're below 30, so we would look for a shorting opportunity. And that would have come at this signal right here. And that produced at 13, well, say 13.5, so we need to get down to 8. We need to get down to here. Took some serious heat. It did eventually fall off, though. So this signal here, you definitely would have to keep your stops 2 full swings back. There's swing 1, there's swing 2. Might have been out of range of my pocketbook. Did get the little hiccup, though, after the signal printed, however. We did not get another signal printing after the little zigzag. Oh, and this is where we're at right now then. So we got the zigzag and waiting for the green line to drop a few points here. The higher settings definitely a little easier to interpret. but it seems to be coming in a little bit late. I think I prefer either the 25 or even the 14. Or why don't we cut it in half? Why don't we go 21? Might be a good compromise. Or 20 trading days in a month. 21 is the Fibonacci number. When in doubt, I always seem to default to the Fibonacci values. Okay, we're getting a few zigzags. We're getting the lines moving into their extreme zones. So if that had happened, we would be short from here. Let's see if, I should be able to pick that up. We'll just short it at the market. There we go. So all I'm doing is simulating selling that signal where the indicator is above 70, below 30. I would have gotten in there. Here's my initial stop. I have a feeling, as is the case with many indicators, the first signal that develops is always going to be the strongest one. So here's your first zigzag back here. The 30 line crosses here, and then you produce your number 3 signal. And that one had some very good follow through. We're still in our respective zones. However, you can see the market languishing a little bit. I've noticed, like I said, that's the case with many indicators. Well, they're just taking their time. All right, gang, I think we're going to close up shop here for the morning. But there is the Arun indicator for your consideration. Whether you choose to throw it on a time-based chart or on your mean Renkos, you can see that a lot of times it will help you with your directional bias, especially when the market is making that sideways consolidation that it so often does. And also help with your signal timing. All right. Hope everyone has an enjoyable weekend. Apparently, well, our grandson came up last night. Apparently, I'm going rafting on the Cowichan River. No, it's not whitewater rafting, far from it. It's a lazy drift down the river. But yeah, I'm like a cat. I don't like to get wet. But it is our grandson, so I guess that's what I'll be doing. All right, everyone, enjoy your weekend. I will talk to you on Monday. We'll see you then. Bye for now.